Hello friends, welcome to Learning Sessions, and today in this video related to the case studies for the BFM, we will be covering the important case study related to application of the foreign currency rates. So kindly please do like the video and share the video among your friends and colleagues so that they can also join Learning Sessions. And if you're new to our channel, please do like the video, do share the video, and don't forget to subscribe to our channel. So do subscribe right now, and if you want to get all the previous videos, all the previous lectures, videos, chapters, previous questions, case study videos, do visit the website iibf.info right now and enroll into the courses and start preparing for the CAIIB right away. So let us start the video now. It's related to application of the foreign currency rates. So the first case study question over here, it says on January 10, 2020, the Mumbai branch of the bank ABC entered into following the foreign currency sale and purchase transactions. So over here we are provided with the different transaction that the bank entered with the customers over there. That first transaction, it says with Mr. A for sale of USD 2000 to be delivered on January 10, and with Mr. B purchase of USD 2000, and further those are delivered on to be delivered on January 11. Okay. So we are basically we are concerned over here related to the different foreign currency rates which will be applied over here. Over here we are provided with the different interbank rates over there as per the cash rate or ready rate, term rate, spot rate, and the forward rate. These all are provided to us, and based upon the different data over here, we will be answering the questions. Okay, first question, it says what rate will be used for the transaction with Mr. A and amount in rupees will be involved. So first of all, we need to tell what rate will be used for the transaction with Mr. A. Now what is the scenario? It says with Mr. A for sale of USD 2000. Now the bank has sold USD 2000 to Mr. A, and those are to be delivered on 10th of January. And in the question itself, in the very beginning of the question itself, it is told that on January 10, 2020, the Mumbai bank entered into the following foreign currency transactions. Okay, so that is a scenario. So if the transaction is to be settled on the same day, if the transaction is to be settled on the same day when the bank entered the transaction, what rate would be applied? It would be the ready rate or cash rate that will be applied. So what is the ready rate given to us? It is given to us to be 67.50/60. So let me write this over here. So this is a ready rate or cash rate, we can say. It is 67.50/60. This is a buy rate and this is a sell rate. This is a buy rate, this is a selling rate. And over here the transaction from the bank point of view, it is related to a sale transaction. Now at sale transaction, what rate would be applicable from bank point of view? It will be the selling rate which will be applicable. Let me give you a scenario. There are two types of rate which are applicable over there. One is the interbank market rate, and the other one it is the merchant rate that is given to the customer itself. So if the customer wants to buy USD, we will be basically referring to the rate that is the selling rate. Okay, because at what particular rate the market is ready to sell, he will be able to buy. Okay, but in this particular scenario, we will be looking at the transactions from the bank point of view. So if we are going for sale transaction, we will be considering the sale rate only. Okay, are you getting this particular difference? So now over this statement, it is said clearly that with Mr. A for sale of USD 2000. Now from the point of view, from the bank point of view, the sale of USD 2000 would be at the selling rate itself. So it's a sale transaction over here. So what rate shall be considered? It shall be 67.60. That particular transaction will be considered, and for the what rate will be used? This is the cash rate or ready rate which will be used, and what is the amount in rupees involved? So we'll be multiplying it with 2000 over here. So that is a particular amount that is involved over there. So we can calculate it simply. So it is 67.60 multiplied by 2000. That amounts to 1,35,200. So that is the answer for the first question over here. That is the answer for the first question over here. Now related to the question number 2, what rate will be used for the transaction with Mr. B and amount in rupees involved? Now over here question 2 is related to the transaction with Mr. B, that what rate shall be used, and further what is the amount which is involved in rupees over there. So with Mr. B for purchase of USD 2000. Now if you want to purchase USD 2000 and further at what rate you will be purchasing it? We will be purchasing it by rate because it is related to interbank market rate only. So it is basically we are going to consider the same rate as to be the rate over here. So it will be the buy rate, and further to be delivered on January 11. The transaction is to be settled on January 11. That is the next day from the date of transaction. So the date of transaction is 10th of January and the transaction is to be settled on the very next working day. So what rate would be applicable over here? What rate would be applicable over here? So on the same day, the rate applicable is ready rate or cash rate. The next day, the rate applicable is the term rate. So it will be the term rate which will be applied over here. It is the term rate which will be applied over here, and as per the term rate, the 1 USD is equal to what? It is equal to 67.55/65. So this is the buying rate and this is the selling rate. So what rate shall be applicable? So what rate shall be applicable? So this is a rate basically at which the bank is ready to buy. So wants to buy. The bank wants to buy. At what rate it will be buying? It will be buying at the buying rate over here. So it is 67.55. So it is 67.55 multiplied by how many USDs are to be bought? It is 2000 USD. So that will be our answer. So what rate shall be applicable? It will be the term rate which will be applied over there. And further, what is the amount involved in rupees? So it is 67.55 multiplied by 2000, and that is equal to 1,35,100. That is the answer over here. That is the answer over here. Now let's move to the next question. It says what rate will be used for the transaction with Mr. C? With Mr. C, and what amount in rupee will be involved? Okay, so with the transaction with Mr. C, it is related to Mr. C for purchase of USD. For purchase of USD, so the bank is going to purchase the USDs at buying rate over there, and further to be delivered on January 14. So the transaction was entered into on 10th of January, and further 11 is working day, 12 and 13 are holidays. It is mentioned in the statement over here. 12 and 13 were holidays, and further the transaction will be settled on 14th of January. The transaction will be settled on 14th of January. Now there is a simple rule related to the application of rate, that in between the dates must be what? All the days must be working days in between. So if we say the transaction is to be settled on the same day, it is set to be the ready rate. If we say the transaction is to be settled on the next working day, it is set to the cash rate. So here is a scenario. So if we say 10th is working day, and for the 11th is holiday, and 12th is working. Now if the transaction is settled on 12th, what rate would be applicable? It will be the term rate which will be applicable. As per the rule, if we say if 11 is also working, we will be saying that spot rate would be applicable, where the settlement date can be T plus 2 days. But in this particular scenario, when we say that 11 is a holiday, in that particular case, the next working day settlement is there, and that case, the term rate would be applicable. The same scenario goes over here. The transaction date is 10th of the January, and further it's settled on after second working day. It was settled on second working day. So what rate will be applicable over here? It will be the spot rate which will be applicable. It will be the spot rate, not the forward rate. Okay, so you need to understand this particular points over here. The spot rate will be applicable. And what is the spot rate given to us in the question itself? It is given to be 67.60/70 over here. Okay, so this is a buying rate and this is a selling rate over here. Are you getting this particular point? Okay, so this is a buying rate, this is a selling rate, and for the what transaction we are considering, it is related to purchase of USD. So at buy rate, the bank will be purchasing the USDs. So it is 67.60 rate that is to be considered. And what is a transaction amount? It is related to 2000 USDs. So again, multiplying it by 2000. So what will be the answer over here? So it will be 67.60 multiplied by 2000. So that is the answer. That is 1,35,200. That will be the answer over here. The important point related over here, that what rate will be applicable? It will be the spot rate which will be applied in this particular case. Okay. Now related to the last question, that in what rate will be used for the transaction with Mr. D. What rate will be used for transaction with Mr. D and amount in rupee involved? So it says with Mr. D, for the sale of USD 2000 is to be delivered on February 11. So for Mr. D, the sale of USD 2000. So any day beyond the spot rate, what rate should be applicable? It will be the forward rate which will be applied over here. So 1 month forward rate is provided to us over here. That is given to be 67.80/85. And what transaction it is related with? It is related to sale of USD. That is, we will be quoting the sale rate now. So it is basically 67.80/85. So 67.85 rate will be applied. So multiplied by 2000 USDs. Again, the deal size is 2000. So it will be the answer over here. So it is 67.85 multiplied by 2000. That is going to be answer. That is 1,35,700 over here. Okay. So that would be all related to this particular case study, that is related to the foreign currency rate application. So kindly please do hit the like button over here, and do not forget to share this video among your friends and colleagues. And you can enroll yourself into the full course videos for CAIIB. You'll be getting the chapter wise full course videos, case study videos, chapter wise previous questions, mock test, and ePDF notes complimentary access to through our Android application over here. So do enroll right now. Visit the website iibf.info. And further, if you want to join us on our WhatsApp group, you need to WhatsApp us writing CAIIB, mention your name along with it, and WhatsApp it to the number 83609442007. And kindly please do rate this video. And that would be all. Thank you so much, and see you again in the next video.